Hi everybody, welcome to this Smart Chart Squawk Box session on Wednesday the 18th of September. So let's dive right in here. First of all, traders are awaiting the all-important FOMC interest rate statement tonight. Widely expected, the US Federal Reserve will cut interest rates 0.25% to 5.25% overall at 7 p.m. UK time. However, markets are now pricing in a 61% chance of a larger interest rate cut of 0.50%. This uncertainty has created a low volatility range-based situation in some US dollar pairs. So patience is going to be very key here as we wait to see how the market responds and then build positions accordingly. The FOMC press conference at 7:30 p.m. UK time will likely be a market mover. And the reason for that is because in the press conference, this is where Federal Reserve Chairman Jone Powell will give more insight into the future direction of interest rate cuts. And that's the most important, because if we look at this summary of analyst expectations, we can largely see the expected size of a September interest rate cut. There's a lot of agreement that it's going to be 25 basis points or 0.25%. There's a couple of investment banks, JP, Wrightson, who are forecasting maybe a 50 basis point interest rate cut today, but there's strong consensus on 25 basis points. But then if you look further out at the overall 2024 cuts, so the cuts for the rest of this year, there's a very, very big difference, okay? You've got some analysts at 50 basis points, some at 75, some at 100, some at 125. So there's a lot of mixed opinions on the direction of interest rate cuts. So that's why the press conference will be very important to get more insight into what the Federal Reserve are thinking and the pace of the interest rate cuts and the size of the interest rate cuts. So it is likely to be a market mover. So it's going to be something to keep an eye out on. Again, we don't know how the market will respond. No one does. So what we want to do is make sure if risk managing any open positions before the news announcement. And then really what we want to be trading is any kind of follow through. All right. So when all the volatility, when all the dust settles, if there's any big surprise news announcements, then we want to trade any follow through. If we get clear signs of everyone buying the dollar or selling the dollar, or indices are going to be one to keep an eye out on, because yesterday the S&P 500 index hit a all-time high, the Dow Jones index hit an all-time high as well. So it'll be interesting to see if we're going to get profit taken on any news announcements and see some declines, or if it's just going to bust through and keep on trading towards new record highs. So that will be quite interesting to see. So let's see how the market responds. It could be a non-event, of course, right? Maybe 25 basis point cut as everyone expected, and maybe they don't give any clues in that press conference on the future and just say, well, we're going to see. It's going to be data dependent. We don't know yet. And markets might just continue to range trade and do nothing and wait for the next big theme to develop, all right? So we'll be keeping an eye on the US dollar. And again, this expected interest rate cut is what has caused the big trends in the US dollar to the downside over the past several months. And because we're coming into the high impact news announcements, we're starting to see more range-based move, but also the dollar is fighting a couple of different things that are developing, such as its usual seasonal pattern during this period of time. So in this instance, this is a US dollar seasonal pattern, and this shows the percentage of months in which the US dollar has closed higher. The US dollar index, which is a index of the US dollar, and it's basically an index comprised of the US dollar trading a basket of currencies, different currencies, mainly weighted towards the euro, okay? But this shows the percentage of months in which the US dollar index closed higher than where it opened over the last 10 years. So we can see there tends to be some seasonal bearishness around that July period. And that was why July was the best month of the year so far, because we had fundamental narratives, we had seasonals, we had technicals, we had all these different ways of analyzing the market, all telling us the same thing, all right, and leading to those very, very big moves. And now we can see we're entering more of a bullish period in the US dollar, but people have still been heavily short, and people now still thinking there's going to be maybe a chance of some bigger interest rate cuts. but it's been going down for quite a while, so we haven't had the momentum to continue to go lower, right? It could change today, we don't know, but in this instance, it's currently fighting fundamentals and traditional pre-quarter flows for end-of-year positioning from money market funds, because the reason why we tend to have seasonal patterns in most markets, all right? So really what we're looking for is some clarity after news, and if any trends do develop, in particular any trend reversals in the US dollar, any changes in market structure will be most interesting, because then now we can get some fundamentals lining up with some of the seasonals, and then if we get the technical market structure telling us there could be some strength, and that could become quite interesting. And that's what we're looking for, the alignment of all these things, okay? So in this instance, patience is key, all right? Especially after you have like a really active high volatility July, August months. Beginning of September was very good. Last week, a bit more quieter. We started to get more lower ranges, lower volatility in the currency market at least. But we've had some really good trends in stock markets, which are trading at record highs. We've had some good twin flips and things like that. But we might get in some profit taking now on some of those stock indices, and we might start to see a little bit of weakness there. So that's going to be something just to keep an eye on, all right? Okay, so let's dive into the market and have a look at some of the potential opportunities highlighted by the London and Sydney trading floors. Okay, so first up, we're on this daily chart of the 180 phase changer strategy, and there's some interesting things going on here with Canadian against the Japanese yen. So on top of what Smart Charts has found, what can we actually see? We have some good cycles here coming off this yellow moving average, okay? So we have sellers, you know, willing to sell this market at high prices, but they're also willing to keep selling beyond low prices. And we're at the moving average where we can see sellers have turned up before, and an angular price where sellers have turned up here before as well. And what we like about this is the fact that, look, there is a potential chance that this currency pair could be going all the way back down to this low point, because markets do tend to gravitate towards those big swing lows, big swing highs. So we can use that as a guideline, okay? Oh, the market could get to that point. And the good thing here is that if sellers did turn up and continue driving this market lower, your target level is achievable because it's above, just slightly above that low point. It's not actually below it, all right? So it gives that kind of good reward to risk probabilities. So on top of highlighting potential trading opportunities, Smart Charts will always do the most important work, which is risk management. So if we click the sell icon here, populate an entry price of the blue dot, stop loss of the red dot, target the green dot. These can all be adjusted according to your own user preferences. Do the risk management calculations as well. Important to keep that risk low. Make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, the week, the month. And then we can set an expiry. We'd like to set a current bar close expiry on a phase changer daily chart. So basically, if sellers don't turn up and continue to move by the end of the day and get to the entry level, your pending trade will expire, didn't win, didn't lose, didn't actually cost you anything, all right? And it'll be interesting to see if we do get those yen pairs. It is one currency pair we have been trading on the faster time frames, okay? Because, you know, we had all these big trends, and then we'd be dealing with this kind of range situation. And most currency pairs have stayed in the ranges, but the yen pairs have actually started to push lower. And still a bit more lower volatility. As you can see, the cycle's a bit more smaller than they were like on the left hand side, that July-August period. But good things there on the lower time frames. So if you're building a watch list in your fast time frames, you'll be able to see these correlations, you'll be able to see these global macro themes that do unfold, all right? And also on the twin flip strategy. So what we can see on a twin flip strategy on the left hand chart here, on the daily, is France 40. Now, we know US stock indices have been, well, a couple of them have been trading at record highs, the S&P and the Dow Jones, okay? The NASDAQ isn't there just yet, but could play catch up. However, the S&P is trading at previous record highs. It hasn't broken through just yet. And we want to be hedged here because we've been heavily long on stock indices, but we can start to hedge ourselves just in case we get some weakness. But of course, you don't want to just short a stock market at record highs. It's going up. Obviously, you want to keep on going with the trend. But we might see a bit of a pullback, a bit of profit taking, you know, depending on the news announcement, the FOMC statement tonight. So in this instance, this is where we can then look at any weaker stock indices and see if there's any opportunities there. So if the stock markets do decline, then we're participating in those weaker opportunities, and then we can still keep the other stronger indices to look for any buying opportunities, right? So kind of hedging our exposure there. And the France 40 here looks quite interesting, because what we have here is, first of all, on what Smart Charts is finding, you can see the price is well below these long-term moving averages, but also we're trading around this area here, these low points. And if we get a pencil icon on the drawing tools, if we look at this, if we can stay below this, then it could be a potential bearish sign. Okay, we did break through it here, but we've come back below it, so we'll be looking for clues to see if this level of resistance is going to hold, if we're going to get a bit of a switch over support to resistance. And if stock markets do decline, then actually on this one we'll be trading the first lower high cycle off a move lower, all right, which is obviously a safer way to operate in the potential chance of stock markets declining, rather than going to the S&P and just start shorting at record highs, which is a massive no-no, all right? So in stock indices, we're trading it both ways, right? Because we're in that kind of situation right now. But we'll keep the stronger stock indices, mainly the US ones, and we'll keep them fresh for any potential buying opportunities. Any declines, we want to buy the dip, and we'll look at some of the European stock indices for any weakness, as generally they're a bit more weaker right now. Now, on top of identifying the opportunity, really what you want to be doing is combining, the power of algorithmic technology, AI technology, with a bit of human insight, human pattern recognition as well. And on top of that, it will help to do risk management work. So if we click the sell icon here, Smart Charts will populate an entry at the blue dot, stop us at the red dot, target the green dot. Do all your risk and portfolio management calculations. Important to keep that risk low. Make sure you can manage the random distributions of wins and losses. These can all be adjusted according to your own user preferences, of course. And as we're trading the daily chart, we put a current bar close expiry on it. So if sellers don't turn up to continue to move, then that's fine. Just cancel the pending trade. Didn't win, didn't lose, didn't cost you anything. And then decline, obviously have the trade here at the bottom. All right. So let's see how the day unfolds, and we move into the high impact news announcements. Of course, what will be most interesting is what's going to happen after those high impact news announcements. So let's see how the week does develop. But that's it from me. All the best for your trading today. Bye for now.